What if you could actually free up hundreds of dollars each month and lower your expenses and pay off your home potentially sooner? In this video, we're going to explore 6 different strategies enabled to help you do this to free up more time and money so that you have a better life. Lowering your mortgage payment isn't about saving money. It's about financial freedom. More cash flow means you can make more investments, make a better use of your time, and start enjoying more of your life, which you only have a limited amount of. Strategy number 1, this is refinancing your mortgage. Now, first, this is probably the most impactful strategy because you may be able to take out a new mortgage at better terms, freeing up more cash and having more advantages than you had with your previous old loan. Even if your old loan had a lower rate, sometimes it makes sense to refinance if you're going to pay off and get rid of debt. So when does it make sense to refinance your loan? Well, obviously if interest rates are lower. If interest rates are lower than your current mortgage, sometimes it makes sense to do it, but it also depends on what year you're in on that mortgage. Once you're past year 10, refinancing sometimes starts the whole new period all over again. Next, what about changing the loan terms when you refinance? What if you go from a 30-year to a 20-year to a 15-year, lowering the amount of time potentially to pay off your home so that you're debt-free earlier? Finally, consolidating debt. Now, when you look at your credit cards, potentially car loans, other personal loans, those rates are normally historically very, very high. And if you refinance a loan, put it into a loan, it now becomes tax deductible, which is a huge bonus while freeing up more cash flow at the same time. Now, there is some cons, essentially, to refinance your mortgage. There's a lot of cost that comes involved into it. Typically 2%, maybe sometimes 3% is what it costs. But at the same time, if you're refinancing your loan and getting rid of mortgage insurance, that's a huge benefit as well. So don't forget about mortgage insurance, potentially with a refinance and eliminating it. Now, with refinance your mortgage, let's be honest, actionable steps are needed here. Don't just pick the first lender that you find. Shop around to multiple different lenders to see who's going to be able to give you the best terms and the best cost. But also remember, the cheapest doesn't mean it's the best, because if your loan never closes, it's just a waste of your time and you lost that window of opportunity. So make sure that you talk to credible lenders, talk to a few, find out who fits with you both and who gives you good terms to make your refinance very smooth. And lastly, as a full recap to just turn around, these are the periods of time where it makes sense for refinancing your mortgage. Number 1, you can lower the interest rate. Number 2, you can change the terms, 30, 20, 15 years. Number 3, consolidating debt to have lower overall monthly payments with free cash flow. And finally, number 4, getting rid of PMI or mortgage insurance, so it once again frees up more money for you on a monthly basis. Our next strategy is called recasting your mortgage. Now, not all lenders do recasting, so when you're initially shopping for your home loan, make sure you ask your lender if they allow for a recast, because this is a valuable strategy that can save you tons of money without even refinancing, and usually it costs around $200 to do. So recasting your loan is essentially re-amortizing the whole loan. What this means is you're taking a one-time large principal reduction payment, applying it directly to the principal, and then restarting the amortization period off the new balance. So you're not refinancing, you're not starting a brand new term over, you're simply making one large payment and re-amortizing the term. So as an example, to make it simple, let's say you're on a 30-year fixed and you made a one-time large payment and you reduced it to a 20-year fixed. That's how you pay off the loan sooner, and you don't lose that current interest rate that you have. So if you got one of those great rates during COVID periods, a recast is an excellent thing to consider. If you're sitting on a large stockpile of cash on the side, or you inherited money and you're wondering, how can I put this to best use in a safe, secure way in my home, a recast may be for you. So what's some of the pros of this? Well, some of the pros of this is you lower your monthly payment, you don't have refinancing out-of-pocket costs, and you shorter the term to pay off your home. Now, there are some cons as well. Like I mentioned before, not all lenders allow for recast. So when you're talking to lenders and shopping, ask them, do they allow you to do a recast on your loan? So an actionable step of how to see if you can do this, contact your current mortgage servicer. Ask them, or your loan officer if they're still in business. Ask them, do they allow you to do a recast with your current loan? If your loan is not eligible for a recast, talk to a very good loan officer and see, does a refinance make sense for you to free up more cash flow? And if you do refinance, does the new loan you're getting allow you the recast option? Our next strategy is going to work with your property taxes and insurance. Why? Because they're a big part of your payment, and you can often come back and challenge your property taxes or your insurance to help you free up more monthly cash flow. Let's dive in and take a look how. So first, let's take a look at property taxes. Now, believe it or not, The state you live in, the government there, they may make mistakes. I know it seems out of the question. You can come back and challenge your local tax property assessor about the property tax on your house. How do you do this? Number one, you can contact a good realtor. I'm emphasizing good. I mean a good realtor that can provide you with comps to show the value of your house should actually be lower. You could also talk to a good loan officer to supply the same thing. What do you do with this once you get it? You take these documents of the surrounding homes that are of a lower value than yours, you submit them to the county property tax assessor to lower your monthly property tax amount, thus freeing up more money for you. And it's 100% doable because believe it or not, the government does make mistakes. Our next strategy is loan modification. Now, this is not for everyone. A lot of times loan modification strategies are for people who are in financial hardships. And usually you don't even qualify for these unless you've begun to miss payments. Once you've begun to miss payments, you can apply with your current servicer to see if they'll allow you to do a loan modification. Now, this, once again, missing mortgage payments will wreck your credit. You are essentially setting yourself up to not be able to get a new home loan for a couple of years if you use this strategy. But if it's your final choice and you have nothing else to do, loan modification is a good strategy to go after. How do you do it? You contact your local servicer, you explain to them your situation, you supply your financial documents to show your financial hardship, and see if they'll give you new terms of the loan. The new terms of the loan could be reduced interest rate, the new terms could be a longer term to pay off the loan, or they could take all your missed back payments and put them back into the loan. Once again, not suggesting loan modification unless you're in extreme financial hardship and you're limited on your options, because it will ruin your credit and it is not usually the best way to do things. Now, even though loan modification has a lot of negative connotations, it is one of your final steps. If you want to keep your home, you don't want to lose your home to foreclosure, go and try and do a loan modification because it's more important to keep your home than lose your home. And so contact your servicer, see if they'll help you do a loan modification. Keep your home, reassess your situation, get back on your feet and be able to start again. Strategy number 5, this is about making bi-weekly payments or extra payments to principal. Now, these options are not going to free up cash flow, but they are going to reduce the term of your loan so that you can pay off your home loan sooner. When you make these extra payments, the payment you're making extra is going directly to the principal to reduce the principal. Every 2 weeks, you make an additional half a payment. That's going to shave years off your mortgage, save you thousands of charges and interest, and ultimately, long-term, your house will be paid off sooner. Next is making just one-time extra monthly principal reduction payments. I personally do this myself. I apply $500 a month, every single month, directly to my principal to reduce the principal. So that's going to save me, in my case, over 10 years' time to pay off my loan. So if you want to just do that, set it up for yourself every month, on top of your normal mortgage payment, make an additional $200 payment directly to principal only. You save thousands of dollars in interest, you pay off your loan sooner, you build equity much quicker. What's the cons? It requires discipline and sacrifice, which most people won't do. How do you put this into effect? Actionable steps, very easy. Log into your servicer, whether it's an application, a website, and simply set up making extra payments, put it on autopilot, call it a day, sit back, and know that your home's being paid off sooner and you're saving tons of money in interest. Our final strategy is the one that I prefer the least out of all of them, and I'll tell you why. Because at this point in my career, I've learned the hard way that the longer you hold real estate, the more it's always worth. And if you hold on to real estate for extremely long periods of time, you make tons of money. With that being said, the final strategy is downsizing and selling your home. Now, why do people do this? Sometimes financial burden gets too much. The home is too big. It doesn't make sense to live where you live anymore. That means you're going to need to sell the home, take the funds, and rebuy at a smaller cost with a smaller monthly mortgage each month so that once again, you have more free cash flow set up to make investments or live a better life. So what's the pros about selling your house and downsizing? Well, number one, if you sell your house and downsize, you can pay off all the debt that you have. You can rebuy in possibly another area that is cheaper, lower cost, and have a better standard of living. The cons are, if you sell your real estate, I guarantee it's going to be worth more in the future and you sold at the current market price. Hold your property as long as you can, please. That's all I got for you today. If you have questions about any of these strategies or you'd like to discuss them, reach out to me. Otherwise, please like and subscribe, and thank you again for your time and watching this video.